How's everyone doing today? Today is May 1st. Happy April is now gone about its way. That's definitely not a smart thing to say. I was reading while I was trying to talk, but May has started. So for sector rotation, the index this month, it's going to be super interesting. I'm going to do this every single Saturday as long as I'm not busy during the Saturday. The main saying for May is this: May, sell, and go away. Bump, bump. And so there's going to be an overall overwhelming discouragement of how they think the market's going to be doing this month. I'm not as bearish as some people. There's still money to be made. What we're going to talk about today is what we're going to focus this week. The indexes, S&P, Nasdaq, Russell 2000, and the Dow 30. And then all the sectors: discretionary, comm services, technology, industrials and materials, energy, staples, health, utilities, financial, and real estate. All 11 of those. We're going to encapsulate these where we think we can find some money, where there's going to be some value, what's going to go well, what's going to go bad. And of course, this is never going to be perfect. There's always going to be some stuff that comes out throughout the week that's going to change the tone, the speed of things, how much farther it can go and such. It's never perfect. But I'm going to give you guys an example of what I'm looking at and what I think we should be looking at and focusing on. So that being said, let's get into it. So the first thing that's going to be super important, we're going to look at real quick, is where in the business cycle are we? Because this is incredibly important. That takes 4 or 5 seconds to do, and it gives you a massive leg up. Now, it's important to understand while looking at this, this is for quarter one, all right? January, February, March. We're in May. So we're technically in the second quarter, but it's not going to show that. So the United States, we could see before quarter two was over here, which probably would have put quarter one about here. So 1, 2, 3, 4. And now we're over here. So off of Fidelity, who I trust, I mean, they make some good stuff. They have some really good trading apps. We're in quarter two. So I'm assuming we're going to be somewhere about here, towards the peak and towards the mid expansion, of course. So it's not good news or bad news. You may be looking at this being like, oh shit, we're towards the top. It's all going to collapse. Not necessarily. This is about just like about the expansion and how quick we can expand and such. So if we're up here, yeah, we're going to see a slowdown, which makes sense because as we kind of come towards September and October, we're going to have the new government budget coming out. Folks aren't as bullish towards the end of the or towards the middle of the year, seeing as the new stuff comes out in October. And that's when hedge funds like to make their bets and when institutions like to make their bets. So we can see off the bat we're probably towards the mid area. But it's also nice that you're going to come into February 2021 business cycle. There'll be another one in a month or two. Let's see what it says. And again, I didn't do this before, but let's read through it real quick. Not like quickly or not like fully in depth, but we can see the U.S. economy appears to be progressing towards mid-cycle. Okay, that makes sense. COVID cases, service industries, and small businesses hit the hardest. We'll probably have the best bounce back. Makes sense. Despite high unemployment, we recovered fairly well. Households accumulated 1.24 trillion in excess during savings. The Democratic and controlled government is inclined towards the further fiscal stimulus, including emergency funds. That was true. The near trajectory may be more volatile than usual due to elevated virus cases. That makes sense. And then global, we're going to improve. China's doing pretty well, so on and so forth. You can read this yourself on Fidelity. But you can see, in February we're here, March, April, we're probably somewhere towards the top middle here. So what's that mean? If we come to our sector graph here, if you ever find this website, which I shared in the bottom of my sector video, it looks like this. You can just go to charts and tools, and you can go like whatever one, I forget which one it is. I have this bookmarked. Oh God, I'm flailing on live TV. No, you can just go to, doesn't matter, I'll just copy and paste this one. What you're going to want to do is go to predefined groups, and then you go to sectors. So that's what it looks like. So that was a dumb way of saying I'm just going to copy and paste it. The last year, these three have done the best. That's not really surprising. A lot of people, especially technology, but energy has been pretty crazy recently. But let's do this. 300 days. You can see this was not as strong. This is energy about 14%, not as bad. These are still pretty bad. 200 days, we can see a shift. That's important. All right, the last 200 days, we can see that it's been more towards the middle, right? Towards the middle. But the last 365 days, they were over here. Not to mention that financials, absolutely fucking crushing it. Not surprising to anybody. When folks are nervous, where's money go? Banks. 150 days. Look at that. All right, this is why people who do this win better. Negative 40 and plus 40, dude. That's insane. And also we can see these aren't losing nearly as bad, and these aren't gaining nearly as much, right? The last 100 days, Okay, so these aren't perfect. These are still okay, but technology is negative. That's insane. The last 30 days when I said focus the right side, oh my goodness, look at that. Good, 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 good. Losing a lot less than these over here now. Energy is taking a little bit of a beating. 25 days. We can see, you know, they're coming from being negative, doing a little bit better. 20 days. Oh, look at that. Look at this. We're seeing a shift. We're seeing a shift right now. To what side? The right side. Will that make some sense? It would to me. Oh boy, who knew? So, are we going to continue to focus the right side? Yes. Are we going to focus it as strongly as before? No. No, 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 no. We're going to have a shift. This is always happening, right? So let's look at this together. So we see an obvious shift from over here, boys, to over here. Is that on accident? No. These things do better when we get towards the peak of the business cycle. So what I want you to look at, down here, we're probably right about here, okay? Utilities, financials, real estate, healthcare too. These make sense, but we're swing traders. We want to find value. What's going to get the shit kicked out of it? Discretionary, technology, common industrials, and materials. We got the shit kicked out of them on a sector rotation basis. So we're going to try and also focus technology and discretionary, at least for now. Now I think comm services, get shorted the hell out of it. That's what I'm going to do. But as we move towards this, we're going to find great deals over here. This is not going to be a perfect science. Okay, if you're going to buy PLTR and CCIV and think you're Gucci, you're not. All right, the volume, we're going to look at this. The volume is going towards large caps and blue chips. So large cap technology, large cap discretionary may be the best place to go. So we can also do some extra digging. We can look at the industrial production. We can see the GDP's actually starting to kind of curl. All right, it was dipping, and now it's starting to flatten out some. What's that mean? Oh, flat. Oh, look at that. Oh, full recovery. Oh, in this area. Does that make sense? It does. It's flattening out. It's flattening out. Now, we're going to want to see it, what? Rise soon. So it's just rising, flattening, falling. So is it bottoming out? Possibly. So we have a flattening, a falling, or a bottoming out. Shit's not rising, my boy. It's not rising. So we know we're not probably over here. We're over here, here, or here. Given fidelity, I'm going to say we're here. It's probably starting to bottom out and get towards, again, over here. And again, the market, this is also a really interesting look at, and this is what I'm going to show you today too, is that in the last, I'm good at math, 75, right? No. Yes. No? Yes. 75 years. We've had this many pullbacks. 84 plus 29 plus 9 plus 3. I'm not good at math, I'm not going to do that. It's close to like 130. 84 pullbacks of 5 to 10%. That's it. That's it. So, if you're freaking out about a pullback, of 2 to 4%, calm down. You're not going to succeed in this. If every time there's a small pullback of 0.5%, you think the sky is falling, you have legit paper hands. And I hate the term diamond hands because that's for idiots. But if you think that every 2% pullback is the end of the world, get a grip, my boy. It can get way worse. So every time we see a 5 to 10% pullback, it averages about 7%. It takes about a month to come back, a month to dip. And then the worse that it gets, the longer that it's going to take. So with that being said, again, I think we're going to be in this area. These are going to perform better than these. Now, if there's a red day, yeah, these are going to die too. But these healthcare over discretionary. Healthcare, utilities, financials, real estate, technology, discretionary. We'll lose less and gain more than the S&P on average. So with that being said, let's check out our sectors and indexes for the day. So first we have the S&P 500. Beautiful. First off, 10 years. That's ridiculous. Okay, clear all the drawing off. I don't want to leave and lose everything. Yeah. Is this sustainable? No. Now, does it do shit like this? Yeah, look at it, runs up. Okay, look at 44% in like a year. This is about, 79 with this drop off for a year. But even if we go to like where it kind of levels out, like this is like where it should have been, right? It dipped down. All right, from here over 44%. It's the same exact gains as this one. So I'm not overly concerned of a massive pullback, but I think we're due for something, right? So let's not get ahead of ourselves. We're still up there. What's this red line? Well, what this red line is our 5% pullback average. Why did I add it? So while I'm watching these charts, and again, you can copy my charting exactly if you pause it, but I see a 5% pullback, that's going to let me know we have about a month of growth. Once it hits 5% pullback, we're probably going to see a good month of runs. If you get nervous about pullbacks, change your thinking. You got to see red days as opportunities to buy. If you see them as only bad days, you're messing up. So from up here down, as you can see, it's 5.08%, about 5%. So if I see a pullback from here down to here, I know the next month's probably going to be pretty green, right? Look at this, over here, over here. 5.72. What happened the next month? Green, 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 green. You know, so from up here and down was only 3.5%, not a big deal. So if I put this red line for a 5% average, I'd like to use that. So on the more micro scale, let's zoom over. All right, we have our only strong support. I think our only strong support around 41 and some change. That'd be 410 on SPY. I use the mini futures because it's a little bit more accurate to me. We have our only really strong support here. This is becoming a stronger support if it holds. It's definitely a resistance. So we gotta see if we hold up here. But this melt up's gonna happen for a while, I think. You know, I think most times when it comes to this time of year, it's gonna slow down. I think we're gonna have less shares bought, less shares sold, less volume from now until June, July, and August. I think those are going to be fine months of melting up, melting down. I don't think anything crazy is going to happen. If you're not making money right now, you're going to have a hard time the next 4 months. I'm sorry. It is what it is. September, October will probably be a shit show, if I'm being honest. I think this is where we're going to see a big pullback. I think there's going to be some budget cuts that are going to happen, and some shit's going to hit the fan, and some folks and institutions are going to take their money from this sector into that sector, and this one's going to fall out. So I think we're going to see that happening. But for now, we look okay. I think this is a really good spot to be. Not necessarily this high up here. I don't want to be this high, okay? But anywhere above the purple line will be a fantastic value as we get closer to it. Now, I don't want to dip below it. If we get dip below it a lot, yeah, it's not perfect. But you can see this whole area, you know, over here. This whole, like, 4-month span. It just was coming, just melting up, melting up, melting up. Oh, value. Melting up, value. Melting up, value. You're going to see consistently with these volumes over here. We're going to have stairs up, elevators down. One more time. Stairs up, boop, 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 boop. Elevators down. That's what the volume shows. You can see this. Look at the high volume ones. Red, 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 red. Oh, green, that's nice. But red, is that an accident? No. But all the small little baby volume ones. Oh, little baby volumes, little baby volumes, little baby volumes. Fuck you. It just drops off, right? We take steps up, steps up, steps up to take the elevator down. So that being said, with these kinds of swings and melt up, you must have stop losses, because if you're going to day trade specifically, swing traders are a little bit more insulated from this. But if you're going to have a melt up and you don't have stop losses, you're going to get screwed when it does finally die on you. So I think the best place to buy in will be around, 41.70. If this does break, that's dope. We'll just buy in closer to 41.30. This is showing some life. It's a big volume candle and it's green. That is a good sign of some life. One thing you should recognize though as time goes on is that from here over, basically, it's a lot less volume, and here up is higher volumes. That is technically a divergence, but not overly worried about that bearish divergence. Overall, the S&P, we're in fine shape. All right, I think we're going to melt up for a while. It may come down, but you'll see this in my videos, I'm going to put some shorts in there. There's going to definitely be some areas to make some money as markets come down. As May slows down, goes May sell and go away. Why not May short some shit and make some money instead of worrying about going long? Right, so there's going to be opportunities going long and going short with the S&P. Next is the Nasdaq. Now I'm more interested in the Nasdaq when it comes to the angle we're seeing of this rising up, because it's interesting that we're starting to really break below our previous channel support, and this is a really nice channel. I mean, from before it would run up beautifully up this channel. These are only averages. It does break below it. But we haven't really gotten towards the top of our resistance trend line in a pretty long time now. It's been about 53 days since we've even broken above this purple line. Are we possibly slowing down on the Nasdaq? I think that may be a possibility. Look at this trend line. I know some of you are like, technical analysis doesn't work. Well, I make better gains than you, so shut up, idiot. So we can definitely see, I'm kidding. We can definitely see possibly the trajectory is starting to kind of shift more of a 28%, about 28% is probably what we're looking at here. Yeah, about 13 is our trajectory. Not bad. So we got to watch that. If we do start to really make lower highs and can't break this resistance, we may be seeing a overall trajectory change to a more calm and less intense angle, which is actually not a bad thing to see. But the Nasdaq this week, again, we have opportunities to long and to short. This resistance at 1405 is intense. It's having a very hard time breaking above that, but also having a very hard time making lower lows. We can see consistently higher lows, higher lows, higher lows. Okay, small pullback. Oh, but then it says higher low, potential higher low. So here's going to be the key for you watching Nasdaq this week, in my opinion. Are we going to establish a higher low, or two, are we going to finally break this resistance? What's going to happen? All right, it may take more than this week, right? But you have to be aware of the first basics of trend lines and how shit's doing. Higher high and higher low, or lower high and lower low. It's as simple as that. That's what we're going to wait for. We have no sign of a higher low. Okay, we also don't have a sign of a lower low or lower high. They're just hitting the same exact spot and dying. But we can see it is technically holding higher lows. This can come down all the way down to 13,706. Hold and keep going. We technically have a higher low. That's going to be our real signal to kind of be more bullish on the whole entire Nasdaq. I think until we see a break of 13,700, we're doing just fine. But while we're in this channel, some corrections are drops, some are horizontal movement. As we do kind of this correction and this consolidation, we have to use stop losses. Of course, if it does break down, it's going to break hard. Every time the Nasdaq breaks down, it is hard and fast, just like, never mind, my love life. No, but if it gets down and breaks here, we may be seeing some lower lows and really creating down. But while we're in here, what's the plan? No one knows the direction of the Nasdaq. No one knows. Anyone who says they know is an idiot. We have no idea where it's going to go. It's technically going from channel up to channel bottom, channel to channel bottom. You need to be ready to long and short. You got to be ready to make money in both directions. If you cannot thrive in both directions, you're going to have a hard time. You should be looking to buy tickers towards 13.8. All right, anywhere from 13.8 down. If it does line up with your stock being a good deal, makes a lot of sense to buy in this area. If you get towards the top of the Nasdaq and it doesn't show life, it'd be a good idea to find an overbought stock and short it. That's going to be the plan for the week, in my opinion, with the Nasdaq. The Russell 2000's also showing much more horizontal movement than what I would consider vertical movement. We had a great run, a beautiful run, and now it's really getting tumultuous. Is that a word? A lot of turmoil, a lot of ups and downs. I think we need to really start relying more on horizontal movement and supports and resistances than trend lines at this point with the Russell until we see a more clear direction. Now it does this. All right, it's done this before. It often goes sideways. Right? It did die and then it came back up. So this is not out of the ordinary. For the Russell 2000, it goes sideways. I'm not really against it. I'm not really here for it either. But, I mean, if you were to look at this past price action, you can find some pretty easy to read plays here. I mean, this is pretty A1 simple shit. If you can buy your stocks in the Russell 2000 towards these support areas, right down here, you plan your supports on the large markets, find a mid cap that's near one of these as a support, you play off of that, you can make a whole lot of money. So not necessarily against the Russell going sideways, but I'm not for buying it this high up if this is a horizontal play. So the Russell, I think it has yet to really show a clear direction of where we want to go. We do have overall long-term higher lows, across the board. It's really showing some life. But where's this going to die off and live to? This is definitely old resistance that has yet to act as a support area. Will this hold? Who knows? Will this right here hold? Who knows? Will this hold? Who knows? The Russell 2000, much more volatile than you would consider the Nasdaq or the S&P 500. There's always going to be massive movements in each direction. I think what's the key to this is realize that the Russell usually goes horizontal. They do make some really good motions. They really do make some money. But more times than not, the Russell does go sideways historically as of recently. And so I think if we can start making some good plays off the horizontal supports, you'll be much more successful. So as of right now, I don't think there's really that many clear supports and resistances in this area that would be super strong. I mean, this is probably one right about there. This is probably one right about here. Right there and right there. I mean, that's not perfect. I can go back through. But if you can start timing your entries with Russell 2000 mid-cap and low-cap stocks where it's like, oh, the Russell's at 2220. It's at a good value. I should look to buy. Or, oh, I broke this, but, 2204, looking pretty good to buy. Try and find some horizontal opportunities this week. I'll definitely keep my Discord folks enlightened as the day and weeks go on. The Russell, be careful, it's moving sideways, but we're getting towards a really good deal. If it is still going up, this is going to be almost a perfect time to buy. Right over here, perfectly timed up, boom, 60%. We can get back down here and make a higher high. Could be fantastic. So Russell, very bullish still, but I got to see some more life before I really go into it more than just trend line support and playing off the supports. Last is the Dow 30. Now, while I have you, this is what's important, and this is really, really crucial. You see how much, watch my language, I'm trying not to swear today, how much gosh darn volume the Dow 30 gets? It averages like $74 million a share. The S&P 500 averages, let's see what SPY gets. Oh, God, wrong button. I'll turn on the equities real quick, I'm curious. Look at this, guys. We don't make edits on this page because I don't have time. 25, 50 million. All right, so the SPY averages less than what these 30 stocks do on average. Why is that important? Because what's going to happen is that as we see a lot more volume starts heading towards these big cap stocks, if you don't start making your money go towards these stocks, you're going to have a bad time. I know I'm not looking at the camera, but I'm typing up so I can show you this. But the more you want to focus these tech growth stocks that are still dying, you're missing opportunities. All right. If the volume is going towards Johnson & Johnson, Home Depot, and towards JP Morgan, why don't you put your money with that and make some money? Make sense? So we can see clearly that the Dow Jones 30 are some big cap stocks. American Express, we know that. Apple, we know that. Cat, we know that. Merck & Co., I don't know that. Salesforce.com and Visa. If they're getting 75 million shares a day, why don't you focus these areas? Because these are going to be where the money's going, right? So we can see clearly on the S&P 500 or on the Dow 30, we're getting towards value. All right, the Dow doesn't really get down here. When it does, you pull the damn trigger. When you get down below these trend lines, you pull the trigger on your favorite big caps. But even over here, look to pull the trigger. I mean, off the top of my head, AMGN, value. This is at value. I watched these. See how it came down? Boom, easy value. 3M is a fantastic dividend stock. Probably one of the best you can find, honestly. It's getting towards value, right? You're like, oh, it's pretty expensive. Yeah, $1.48 every 3 or 4 times a year, $5 per share you buy. You'll double your money in like 4 years. That's fantastic. I like that a lot. Cat. Okay, I'm good at typing today apparently. Cat. Coming towards value. Home Depot ran off. Kerchoo. So what am I getting at? If we have clear value in the Dow 30 and you can then get a ticker you can hold for 5 to 10 years and get dividends and growth out of, why wouldn't you do it? Right? So as we can see with -YM, we have a clear value coming to fruition. Now it does this a lot. Okay, it looks very similar to this, right? It runs up, sideways, 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 value takes off. But this is not, this value is the same price as where it is now. See that? That's critical. Where you thought it peaked out months ago was actually a good value months later. Use your head. So this is what it's doing right now. In 3 months, this golden line will be up where it is right now. So again, this is a great long-term investment. As long as this is at value in this area, find your favorite growth stocks, find your favorite dividend stocks, and make some money. Simple, easy, rinse, wash, repeat. VIX, we'll cover slowly, is having a hard time getting above this orange line. Hard time breaking this resistance. If that's the case, you go long when it gets up here, you start to short some stocks and it gets down here. Short, long, short, long, short, long. You find this stock that's overbought, then the VIX is down here, possibly look to short it. If you find some good ass values up here, look to buy it. Simple as that. And then, of course, the Treasury is still going up. I'm hell bent on saying 420 is going to be our low. I think it's going to get up here eventually. But look at the consistent is usually around 16. It tanked hard because of COVID. This is where it's supposed to be. So no one freak out. A lot of folks, it's going crazy. Yeah, well, the lower last 10 years has been $14, and we've been below that for a while. So it's just fine. I wouldn't freak out too bad about it. Overall story of the indexes. How long has this video been so far? 23 minutes. Congrats. You're going to have a shit ton of information if you care to join me for this long. The indexes this week, I am bullish on. I think we're going to have a nice melt up. S&P, Nasdaq, Russell, Dow 30. The next month, we're probably going to be higher than where we started the month off at. That's my assumption. Probably going to be higher, or if not, close to even. But we are much higher than you want to be. We're so close to the top, and on the 10-year average, we're so far up there, you got to start introducing some shorting strategies. Now, I don't mean shorting every popular stock like, fuck it, I'm going to short Tesla and make a bunch of money. Not the move, right? Figure out your style. Some folks like bear ETFs, right? Your SPXUs, your LabDs, you like that? Great. You wanted to short SPY? Great. Put options are great. I personally like to find sectors, which we're about to talk about, that are overbought. Find tickers that are overbought on that, wait for a dip, and then print out. That's what I like to do. Let's check these indexes and let's check these sectors real quick. So, just to recap, here's all of them. You have materials, you got comm, you got energy, financials, all this great stuff, technology, whatever it is. Let's just go back real quick. Sweet babies. Let's go back. All right, we're here. Good. Short, right? That's going to be the goal. So, materials, not focused. Materials is having a hella hard time getting above this purple line. Hard time. Let's go back a year. Not 10 years, you idiot. Not that. I got it, boys. Stick around. Don't leave me. It's having a hard time getting above this line when it gets below it. So we have a lot of little risk, a lot of reward. I'm not very bullish on materials right here. I'm much more bullish on materials towards the bottom. So I'm not saying short this is a sector that's not the smartest idea, but if you can find any material stocks that are really overbought, there may be a good opportunity to look to short them. If it does break above this trend line, again, it's probably having a high chance of hitting the top. It does that a lot. Once it breaks above, it's usually going to run its course up here and then stay up here. But now that we're down here, okay, I don't see much strong support here, do you? I don't see anything really adding support up here. I don't think this is support, really. I don't think this is a very strong one. This is maybe one down here. So I think materials is in the middle. If it definitely is showing an overbought material stock, shorting it makes a lot of sense. Buying it, sure, if we break this trend line or we create some form of support. Until this really holds, this is very convoluted. I mean, maybe this is support right here. Possible right there. That's possibly one, but I'm not too sure yet until we see some materials. Not the greatest on. I would probably get close to shorting overbought ones. I would be going long on them, personally. Comm services, boy, I'm ready to short the shit out of this. I'll tell you what. Comm services has never been this strong. It does run up and hit this and then die. It runs up, hits this, and then dies. It runs up, hits this, and then dies. Runs up, hits this, and dies. Over the last 10 years. Wrong chart again, idiot. What's it do? It runs up, gets above here, and it dies consistently. So I think that comm services, given the fact that on our chart, it's nowhere near value at all, and it's towards the top, I'd be ready to short comm services. I think there may be some value, but for me personally this week, avoid it if you don't want to short. Otherwise, find some overbought ones and then beat those shits into the ground. For real. Energy. Whoa, look at that. It's almost like that resistance line I drew actually makes sense, and the support actually makes sense. Whoa, who knew? Sarcasm, I knew. But this is definitely a channel that's kind of developing. But with energy, you must be sure to know. It is the one sector that's been downtrending for a very long time. It's made up a lot of shit that doesn't make a lot of money. And we have plenty of room still to run up. You can run up another 28, 30% and hit the top and be just fine. But the overall trend is down. This trend right here is dead. Boom, gone, broke. See it. Is this the new one? This is what I'm watching. Is this right here? Is this going to be the new trend? I'm not overly sure quite yet. I've been watching this for a while. If that is, beautiful. If it isn't, whatever. But this is definitely not showing any life. Now, will we find a support area in here? I'm not entirely sure. I think we may find one. Let's activate this. This is now no longer useful. Maybe we're here. Or maybe this area is going to be our support area. If that's the case, we still got a good 2 or 3% down a dip into it. Overall, I'm still bullish on energy, okay? But it's getting towards the tail end of where it wants to run on our sector rotation. All right, it's getting towards the end. All right, if we're over here, baby, this is not going to be where we want to focus. So as long as we have some life overall, that's great. But I'd be buying energy towards 46, 47. This is where I want to buy. Anything below 48, for now, that's a great value. Up here, I'm willing to short it and find some energy stocks I've ever bought. So I think this week, you're kind of in no man's land. This is not really support. This is not really support or resistance. If we see the market's pulling back, yeah, be ready to short some energy stocks. Otherwise, I wouldn't touch them until value to short or to go long. Boy, oh boy, financials, what a year for you. 10 years, again, it's cruising for a bruising for a pullback eventually. Now, to be fair, though, this is not overly, that's probably a good line here. It kind of goes up and down through this line area. It's not too far up. And again, some folks really like to be dramatic, and it is what it is. We can see constantly hitting this orange line and dying. Otherwise, it's always going to be a good value. Financials, to me, it ran its course. It had its earnings. It's showing some life. Now, I don't see any really clear horizontal support. Now, this was a resistance that broke. So possibly we're going to have a support kind of in this area if it does hold. Probably closer to here, honestly. So I think this week we're kind of in no man's land. We have no idea which way it wants to go. It'll be on an individual basis on every ticker that you like. A lot of financials is overbought as it is. So I think you're going to have more luck finding overbought ones to short, honestly. But I think that if the market's bullish, you shouldn't be trying to do that too often. So I think if we're kind of where we are now, we're kind of towards this middle line of where the price action has to bounce off of. If we break this again, go long. If we show no life and can't live here, you want to short this week. So financials in the middle, more individual basis. It should be the focus of sector rotation. But let's give it a few days, see what it wants to do. Industrials also having a very hard time breaking above this resistance trend line or this mean regression line. We can come to the 1-year chart and see it consistently can break above it. When it gets above it, bounces off of it. Oh, thank you, thank you, thank you. When it gets below it, can't get above it. Frick, frick, frick. So, given that information, given that industrials is not our focus, I would be remiss not to mention shorting it kind of makes some sense. But it's melting up. All right, it's melting up following the indexes fairly closely. See how similar these two look? See how similar these two look? Again, is this on accident? No. Is this on accident? No. The YM, look at YM industrials. They're the same. I mean, they're the same. So the industrial average follows the industrial. So the top 30 and XLI follows almost the same exact thing. So if YM is taking a beating, industrials taking a beating, I would short them. But we can also see that we get a lot of volume in the sector. So overall, I'm bullish on industrials, but, big but, individual basis. We cannot get above this resistance trend line here. It's having a hard time. It will eventually pull back and find a support. So it's more individual basis. But to watch industrials means to watch -YM for your entries for sure. Technology always has a bigger cap, more opportunities than any other sector. I mean, it's just always going to be fine. Then again, there's going to be values. Okay, if we get over the next few months, there will be fantastic values in technology. We're right here. We're not very far away from hitting here, so we're having to find some great values. Right here is a fantastic support area. I mean, honestly, if it holds here or it holds this gap anywhere in here, if it does hold this, we're looking pretty for this week for technology. Now, growth tech, not so much. Big tech, yeah, kinda. I don't think that you're going to find a shit ton of value in growth stocks right now, given they're getting towards a pullback or a late expansion phase of the market. With May selling off and all that, it makes more sense to find some surefire things. Tesla, Apple, Microsoft, right? Those big name things. You can go a step down, even 2 steps down. I'm saying that's maybe like 5, 10, $15 billion market cap is probably just fine. But if you think you're going to make a butt ton of money on growth tech right now, I think you're going to be mistaken, especially this week. But in 2-3 months, yes, I would totally agree with you. So we're at a good value. It does bounce plenty around this area. Okay, we're going to move this little baby line up. Move it up. It bounces off this area plenty, and we're right there. So technology, I am bullish on this week. I do like it. Can you short? Of course, but I think going long this week or putting yourself in position to hold for 2-3 weeks right now does make a lot of sense with technology. I do like it this week. Consumer staples. If you need insulin and it's $5, are you going to buy it? Yes. If you need insulin and it's $10, will you buy it? Yes. If it's $1,000, will you? Yes. This is shit people need. Now that's a medical example, but this is shit that people need. And as we kind of mosey through all these sectors, consumer staples will always be a fantastic pick. I think this is, again, this line that I drew and it was put there before, bounced off of perfectly, and now it broke this resistance. I think we have plenty to run up. All right, I think it may kind of do one of these, like, oh God, I'm kind of confused and I'm startled, and then take off. So consumer staples this week, does it line up? Yes, it's near where we're at. I would consider consumer staples to be a fine pick this week to go along on. I'm not overly bullish on it, but considering the last year, if it can get up here and live and keep going, fantastic. Once it hits this orange line, though, we should be ready to short it. But for now, consumer staples, individual basis, I am more bullish on it. Real estate, what the hell are you doing? I said this months ago, saying it's going to be a good pick, and I even said in the first episode, it's going to be a good pick. And then look at that. Oh, Kerchoo taking off. Real estate is literally right where it was before. This is a kind of a massive deal that this was the previous high of the whole entire sector was right there, and it just crushed it. So real estate, sorry for those with the headphones on, but until it slows down, why would you hop on? I mean, honestly, I think that there's going to be a fat pullback eventually. This is kind of impossible to maintain. But in this week, until I see a reason not to like real estate, you gotta go long. Especially those ones that deal with vacationing and hotels and those kinds of things. Real estate, still perfect. I called it. Love it. Live it, love it. Good. Utilities. Oh boy, is this resistance becoming a new support? Oh, you love to see it. Let's put that bad boy there. take this old one, say that I guess their resistance will probably be somewhere around hither. It's probably good right about there. So looking at utilities, is anything going to stop it from running up here? Probably not. Now, if it does hit this little area and die, that's a bit of a concern. But again, utilities, sector rotation, is it anywhere towards the middle? And look at that. Oh, it ran up big. Now it's pulling back a little bit. So I think utilities, I'm still bullish on. Even the last few days, they got the shit kicked out of it. I'm still very bullish on utilities. There's only 216 tickers, so you're going to have a lot less opportunities to buy in. But if you find a good utility stock that has a really good value and it has good dividends possibly, whatever, maybe utilities make some sense this week. I think once we get closer to 68 or 67, it keeps pushing up. We then find overbought utility stocks and we short them. But for now, bullish, love to see it, good stuff. Oh my goodness. It's like the things that I said came true. Oh my God, who knew? Again, it's sarcasm, not really this cocky. Relax, I'm just in the mood today. I was in traffic and it made me angry. Healthcare, oh boy, he said, hey, these will be good, and look at that. So this is going to be interesting because you go to the 10-year chart and you can see it's much more consistent than the other. It's very consistent compared to everything else. Come down here, draw a little trend line, be like, all right, looks like this is probably about there. It's probably a good regression mean line. Anything above that, good. Anything below that, good. So we're getting up there, all right? We're getting real high up there. So I'm very bullish on healthcare stocks individually. If you like a stock individually, I'll go for it. But I think we're kind of having one of these happen. Okay, look at this. It goes up, it holds, and then it shits the bed. I would be preparing myself for a possible fat pullback on healthcare. Now, is it going to be this month? Maybe. This week, I doubt it. I think healthcare this week, if it holds this area, you should have a few good days, if not a few good weeks, of printing some money. Eventually, healthcare will pull back. If healthcare starts to drop off a cliff, this is a prerequisite for you. If it starts to drop off of a cliff hard, you find overbought healthcare tickers and you short them. And again, I don't like pushing shorting, but you must be prepared to make money in any market situation. And if we are going to have high up there, high up on all the indexes, and then healthcare is high up there as well, and the elsewhere's coming down, you print, my boy. You find your opportunities, you short, you have a buy order above it as a stop loss, and you make some money. So I think healthcare we're going to be very bullish on long term. I would want to buy closer to 118, but if this does hold, kind of like 4 or 5 days, kind of does one of these and make some money, that's fine. But it's up there, but I'm still bullish. Lastly is discretionary. This is shit folks don't need. This is going to be interesting. It's going to be really interesting. With COVID kind of coming to a close, and again, not being insensitive, but like 54% of folks are vaccinated, and folks are stopping to care. Let's just be honest. Some shit folks want to buy, maybe getting bought soon. I think that this is, again, a nice melt up. It matches the indexes. It kind of just goes up and down, up and down. You may want to find some intraday opportunities, like go to the 20-day start. You can see, little baby triangles forming, little baby trend lines forming. This is a nice resistance. If you can buy anything towards like 177 and some change, great, go long. Otherwise, I am bullish on it, plenty of room to run up. It does like to hit around I drew his lines for a reason. It sits at this line, it kind of melts up it. Melt. Oh, I'm above it, come back down. Oh, I'm above it, come back down. Oh, come back to it. These are nice middle lines. So discretionary, it's a lot like industrials. I would definitely be bullish on individual bases, but I want to watch the overall markets. These seem to be tied more together than a lot of the other ones. So again, discretionary, I like an individual basis. I'd be ready to short it if it does tank, but again, I think it's better than, let's say, consumer services. So, what did we learn today? A lot. We learned that Evan is a big fat nerd for these kinds of things. But what's more important to you is that we are very high up on all the indexes. Does that mean there's a bull market coming? No. Does that mean that bear market's coming? No. Nobody knows. Nobody knows. So what you can do, what you should do, what you will do for me, what you will do, formulate a plan for bull scenarios and bear scenarios. That's what you should be doing tomorrow and today. I think if we are bullish, I will A, B, C, D, and E. If we're bearish, I will A, B, C, D, and E. For me personally, given this information, because I did not research beforehand, I did this live with you guys. I do this every Saturday with you. I didn't see this. If it's me, bull-wise, I will find value most likely on these sectors that I like in these 4, and then these 6. I'd say healthcare, utilities, financials, real estate, tech, and discretionary. I will find some value if we're bullish on financials, which there will be some, industrials, which there'll be some, technology, which there'll be some, Consumer sales, there'll be some. Real estate, utilities, healthcare, there'll be some. I'll find opportunities there. Now I'll tie these with their indexes. Hey, what's up? I'll tie these with S&P, Nasdaq, Russell, and our, of course, industrial average. So if those do line up well, if I see value in all from the sector, the index, and the ticker, I will pull the trigger. If we're more bearish, which is a very high possibility, not bear market, don't freak out, we're still very bullish, but there is a bear week. You know, May sells off, folks hear this, they all start selling off. I will find opportunities to short. Now, you should now choose now, ETFs, sectors, individual tickers. Do you want to short a ETF? Like LabD is a great one to put money in and try and go long and short it. So like when the S&P comes down, LabD goes up. Do you want to do that? Put money in to go long when shit hits the fan? Do you want to buy a sector? If you want to go look and be like, hey man, I'm not very bullish on basic materials. All right, I'm not very bullish on comm services. I want to short it. Yeah, then short the whole sector. You know, you may only make 3 or 4% all week, but it's better than losing money. So I mean, if that's the case, that's great. But then also you can always look to short individual stocks. And again, I would time the shorts up with S&P being high, which it is, and the sector being high, like comm services. That to me makes way more sense for a bullish mentality than to be freaking out and be like, this is hard, and I didn't make any money in my growth tech stocks. Well, why didn't you switch your plan up? Right? It is what it is. So if I was if we see a bear bear week, let's say this hits the fan. All right, oh God, we're dropping. Right? What's going to drop the hardest? This, which is red resistance, or this is good, or this. I would assume this one hits hard, this one hits a little bit less, this one holds off just fine, right? But then comm services, it's really a far up there. So I mean, I would just do your research, do your due diligence. I would match this up as best as possible. I think we're very bullish this week. I think the sector rotation makes sense. I think we're starting to move towards a peak of the business cycle. That means that we're going to have less volume, less money getting put in the next few months. If you're new, it will get harder. Welcome. No one's going to tell you that. Everyone's going to tell you buy Doge, buy Tesla. My smile looks good today. They're going to tell you the same bullshit to get clicks. I'm telling you the real shit right now. It will get harder. And you may not want to believe me, but it is what it is. Check this out real quick. So let's go and look up average returns on months in stock market. That's probably not the best way to spell it. Oh, good. I love when I get Yahoo and not Google. Average return in stock market by month. I type loud. Let's see. That's not the website I wanted. This is it. Where is it? There's one that I have. This is it. So, a lot of months are good in January. February is pretty good. March is pretty good. April is the best usually. 50. May, 42. 29. Average returns 0.17. This month was 1.56. Do you see what I'm saying? It will get harder. So you can see overall 9.97 negative, because that's when earnings come in. It's not fun. 85, 156, 17. June 6, July 99, August is then worse. September is then worse. October, because of the new budget, is okay. Better and better. So if you got in to stocks because of GME and shit, you got in right when it was the best month. You got best in November. November, December, January are the 3 best usually, because October is when folks set their budgets for the institutions and the hedge funds, and they put their shit where the government money is supposed to be, and then they print. So if you are not used to that, I suggest you spend some money on your education. Is it me? Maybe. Cool. If you want to come chill with me, sick. But if you're gonna be so dense, I mean this as nicely as possible, that you are willing to lose money doing this by yourself instead of spending money on books and education to then make money, you're being foolish. Wholeheartedly foolish. So, with that being said, May is going to be harder. Be ready to short stocks. Be ready to go long on stocks. You must be prepared every single day and week to do battle and make money. If you're going to do this by yourself, if you're a newbie, good luck to you. I hope you stay around here, and I'll try my best to help you. Check out the Discord if you want. Otherwise, have a good rest of your Saturday. I appreciate y'all's support. I hope this helps you guys shed some light. Even if, and here's the best, before I go, the best part about this, if I sound like a complete maniac, if what I'm saying sounds so confusing to you, Good. Know what that means? It means you, new guy, you have things to learn. And that's the best part. The second you start to get over euphoric and think that you know everything, the second you lose all your shit. Big facts. So if I sound crazy, if you're like, what's this man talking about? I suggest you stay around and learn some more. Have a good rest of your Saturday. Tomorrow, new watch list. We'll see you guys then. Appreciate you.